Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Apple report for Thursday, December 28th, 2023. Let's take a look at the charts. Big picture, still bullish above the low 180s, 181.59. Primarily long term above the mid 160s. You put those two together above these channel tops that we settled above in May, retested again over the last few months, and then closed above the 181.59 channel top. You put that all together, this still points to higher trade as we move into later 24, the middle part of 24, still in reach of 234.05. But we do have a near-term sell signal that is in play now that we've actually closed below this rising 194.30 speed line combination channel bottom at 195.03. Now we closed below the 195.03 channel bottom on Monday. On Wednesday, we closed below the speed line at 194.30. 194.30 up to 195.03 is considered your primary overhead near-term resistance, able to contain buying through next week, and below which 186.65 is likely by the end of next week. Over the next 2 to 3 weeks, 3 to 5 at the most, 181.59. Once again, that long-term support that can absorb selling through all of the first quarter. And once tested, we can round back up to this 234.05 channel top in the months following. So that is really kind of what we're expecting here. I will mention also, that you've got the 194.30 to 195.03 area. There is this descending channel top at 194.93. So, if you want to sell 194.30, I think that's a great play, actually. But if you're a little more cautious, if you want to give the market a little more breathing room to the upside, you could hold out for this area here, 194.93 to 195.03. We almost called this our three-star resistance combined, reducing 194.30 to a minor point only. But after careful thought, this speed line is trend defining in its own right, and we are below it. So it really is the beginning of what I would call a 73-cent range, beginning at 194.30, ending at 195.03, that you can sell and stay short down to 186.65 by the end of next week. And over the next few weeks, 3 to 5 at the most, 181.59 in reach. And it's about as simple as that. Now, for the downside today, we do have this soft level at 191 even. It did roughly contain Wednesday's lows. It can behave the same today, but I will also say that if you've not gone short, and if you're not given the opportunity to go short in this 194.30 to 195.03 area, and if we close below 191 even, that is your next opportunity for a bearish continuation that should then play out over the following 3 to 5 days to this 186.65 3/8 Fibonacci. So closing below 191 even is a 3 to 5 day swing trade to the downside, as is actually 194.30 to 195.03, a 3 to 5 day swing trade, but it's also a 3 to 5 week swing trade to the downside. Continued daily settlements below this rising, narrowing band of resistance will keep 181.59 in reach as a 3 to 5 week target. Now for the upside, simply put, if we close today above 195.03, and I'll take you to this chart as well, we'd also have closed, of course, above 194.93, but I can't ignore the 195.03 channel bottom that we see all over the place. If we close above 195.03, also above 194.93, then just the opposite. That is a clear rejection of a 3 to 5 week sell signal. And in my book, the rejection of a textbook sell signal is in itself a valid buy signal. So closing above 195.03 would also involve closing above 194.93. And under that scenario, I would expect a retest of the 198.23 July high within several days. And over the next 1 to 2 weeks at the most, this 201.67 channel top where we can place a weekly high. So it is about as simple as that. I will say that if we close back above 195.03, not only expecting 201.67 within 1 to 2 weeks, but I think onward and upward to continued higher trade. We've got all kinds of things going on. We've got 202.63 as a simple trend line that will this 201.67 converge with over the next few days. I'm just scouting out what the realistic objectives would be, and I will go out on a limb and say that if we close today above 195.03, 195.03, that this a 220.96 formation in reach over the next several months. I think it's about as simple as that. That the rejection by closing back above 195.03, no good reason to be short Apple as we move through the rest of the week and through January trade. But below it, selling pressures can and should continue to build. And I am, once again, and last time I guess I'll say that, holding below the 194.30 to 195.03 area maintains a 181.59 3 to 5 week downside target. And once again, if we close today below 191 even, that is a secondary sign of weakness that is actionable. 3 to 5 day swing traders can play that to the downside. 186.65 likely within 3 to 5 days of closing below 191 even. Please click like, share, subscribe. Check out wickedstocks.com for our 5-day free trial. Of course, I'll be back tomorrow with Friday's Tesla and Apple reports. You have a great evening.